The coaches and the coaching is more about empowering you to get you to the position that you want to be in with your finances. So you've got everything in life, unfortunately or unfortunately, involves some level of sacrifice, right? So as you say, if you know that you're not buying those shoes today, you know that at least it's going towards something that you want more in the future, hopefully. So that is kind of then the last step, is that thinking about getting those goals set up to get your investments set up accordingly. Very few women would describe themselves as investors, even when they've got investments. But then when we look at the reports of how many women actually do invest, which is higher than those that call themselves investors, it's still lower than that of men.
Welcome to Blisstopia podcast. I'm your host, Mercedes Castellani, life purpose coach, business owner, and your spiritual guide on all things mindset, manifestation, and purpose. This podcast is a space for deep reflections, meaningful conversations to help you expand your mind, dive into the depths of your soul, and create a life that makes you feel alive. Whether you're walking, driving, or simply vibing, take a deep breath and get ready to dive. Hello, my love. Welcome to another episode of Blisstopia podcast. I'm your host, Mercedes Castellani, and we're going to have so much fun today talking about one of my favorite topics in the world, which is money. Our guest today is Zoë Burt. Zoe is a UK and US qualified wealth manager who started her career in Milan. Then she moved to the UK, where she worked in different startups in the UK and in international markets. She has dedicated her career to empower individuals, especially women, to take control over their finances. She has worked with thousands of people who felt like finances were not for them. And she helped them understand that investing is important, that pensions are important, and that sustainable finance is super important. She recently co-founded a new business, which is called Financial Freedom Coaching, with one of my dear friends and also a financial advisor, Lisa Meller, who will probably listen to the show and who introduced us. And they're working together on closing the advice gap. So welcome, Zoe, to the show. I'm super happy to have you. And I'm also super happy to open up this discussion, which is so important.
It's great to be here. Thanks so much for having me. It's a real pleasure. So I'm excited to talk about money and all the things that we can to break down some of those myths today.
Amazing. So first, I want to get to know you a little bit better, allow the listeners to get to know you a little bit better. Why did you decide to become a wealth manager? What was the motivation for you to go into this topic?
Yeah, you know what? It's a really good question as well, because I've not exactly had a linear path. I did not in my school years or childhood think, oh, can't wait to get into finance, which some people definitely do. And that's great for them. But that was not me. So I actually studied languages at university. I did Spanish, French, and German. That's what I loved. I knew for a long time that's what I wanted to do, but I couldn't really see where it necessarily went, because I knew from a relatively early stage that translating wasn't for me, because that involves a lot of sort of individual work on paper, which if any of you do know me, I like talking. So it's definitely not for me. And I knew that I didn't want to be a teacher. Both my parents are actually teachers and I'd seen the school system, but I also knew how tough it is to teach, particularly English children languages. So they were kind of crossed out, and they were the ones that were the really obvious options. And we were kind of lucky as part of studying languages at university. And also at school, I'd done A-level economics, but we did extra modules. So we did a lot of Hispanic studies. And as part of that, I focused a lot of my time on particularly, for example, Hispanic politics, those of Latin American, the economies, and I got really interested in it. So when I came to graduating, I was thinking about going down a line of kind of financial journalism, something to do with geopolitics, but I really struggled to get the relevant networks to get into journalism. So I thought, you know what, maybe actually a good option would be to go into finance itself, get the relevant qualifications, get some knowledge and some background. And that's how I ended up essentially in Milan working as a wealth manager. And I really enjoyed it, and it was something that I got a lot out of. But I then sort of pivoted to come back to focus more on financial education rather than financial advice. And of course, as you mentioned, now into financial coaching as well, particularly having noticed within wealth management that there was a lot of people that were neglected from the traditional financial services industry.
Can we talk about that? What is the advice gap that you've seen, and why did you decide to focus, your services into all of these different populations that are getting effectively left out of the financial markets?
Yeah, it's a really good question. And it's a term that I think is going to start coming up more and more. Essentially, to take financial advice, whether people realize it or not, of course, it comes at a cost. There's a cost for you as the individual. There's also a cost for the advisor because they've got to have all of their relevant regulatory setups, insurances, etc. And the way that it's gone in the UK with compliance means that it's very difficult, almost impossible for advisors to service people and to give advice to people unless they've got around more than 200k in assets. Now they can, of course, there'll be people I'm sure that'll say out there, I'm sure that's not true. I had advice with less. But at the moment, as it stands, with the regulation and the various mechanisms that are now in place to protect people, which is right. But the flip side is that you need a lot of money to be able to see an advisor and for the advisor to break even as well. So it's becoming an ever growing gap of people who still want access to help, still rightly want access to people who are qualified to give the information, but are not able to access it because they don't necessarily have 200, 300k of, and we're talking cash assets. That's money ready to go and be invested because it's an awful lot, right?
Definitely not the case. And I think also when people are just starting out, maybe they want someone to help them like just get started with their finances. And maybe they're not starting with 200 or 300K like right away.
Yeah.
Maybe they're starting small and then the plan is to grow to those levels, but maybe they're not starting right there and then. Some people, of course, they might have that cash in there available, but some people don't. So there's also a lot of people who want to start small and grow. But before we continue, can we clarify, because some people might not be really aware of what's the difference between a financial advisor, what's a financial coach, what are like all the different figures that we can find out there that we could actually get some support from if we wanted to grow our finances?
Yeah, it's such a good question because there are so many terms out there and they can become very quickly quite confusing. It's worth noting as well that some are slightly country specific. So I'll talk broadly about what the terms mean overall, notably for the UK, but do note that if you're elsewhere, just double check it for whichever country you're in. So essentially, a financial advisor is normally a regulated individual who can give you advice. And what that means is that they will tell you a product to invest in, and they will usually tell you the investments that you should choose as well. We'll be very specific about that. Now, when we then move into a wealth manager, if we're getting really technical, often a wealth manager is then an individual who just takes over the investments. They won't always look at the wider picture, but sometimes they do. And it's kind of interchangeable with financial advisor. They will sometimes also take over your investments and continue to manage them, having told you what to do. Now, the difference between those two terms and that of a financial coach is that a financial coach won't tell you what to do. So we're not regulated. We are qualified, but crucially not regulated. So there's not a compliance board overseeing what we do. But what that means is that I won't tell you as a coach, this is what you should choose and this is what you should invest in, but rather I will guide you through the relevant bits of information, help you with the research and the understanding of what it all means, and hopefully get you to a position where you feel empowered to be able to make the right financial decisions for you.
So to summarize, and if I understand correctly, the financial coach will tell you the principles, kind of like the big lines that you could follow, and then it's up for you to make your own mind and decide. Then the financial advisor will tell you, okay, this is what you should be doing very specifically for you specifically, and they're regulated. And then the wealth manager actually takes your portfolio and does it all for you.
Yeah, pretty much. Yeah, that's
Perfect.
a really nice summary of it.
Perfect.
And of course, as I say, sometimes a little bit interchangeable. Sometimes those financial advisors do take the investments. Sometimes the wealth managers don't look at the wider situation. But I think crucially for today, the coaches and the coaching is more about empowering you to get you to the position that you want to be in with your finances. It's much more holistic as well and takes other factors into consideration, like your money mindset or some of your memories around money and how they formed what you do today, rather than just looking at, okay, this is what you should do.
Perfect. Yeah. And that's also important to talk about. Okay, are we talking about money itself, the logistics, what I should do with my money? Or are we talking about money mindset? You know, what happened in your childhood before ages 0 to 7? Which kind of attachment style do you have with money? Which kind of emotions do you feel around money? Because all of those things are going to be definitely having an impact on the choices that you're making. So to me, the way I see it is like money mindset is kind of like what's under the surface beneath the iceberg. And then what we see on top of that is the actual finances and the choices that we make. But that's literally the tip of the iceberg. But if we don't have our money mindset also in place, we're not going to make the right decisions because the subconscious mind is going to be running the show.
Absolutely. And I think it ties in as well with that education and confidence that people might feel around money. And if you're consistently feeling that money isn't something for you or you don't understand it, then it's going to be difficult to even take on board potential advice because you don't necessarily know whether you're making the right decision or what that looks like.
Absolutely. And that takes us also, and it's a very nice lead into the gender gap.
Yeah.
We do have a gender gap in terms of salary, but there's also a huge gender gap in terms of our finances. So can you tell us a little bit more about that? What's the current situation, men and women in the world of finances and investing?
Yeah, absolutely. And I don't want to go all doom and gloom because I feel like it makes things a little bit depressing. But as you say, there's not a single country in the world that has achieved gender parity when it comes to pay. Firstly, that feeds into then all sorts of other gaps within our money and investing. So when we look at pensions, for example, in the UK, where it's relatively simple to get the measurement, but still the stats come out as anything between sort of 35 and 50%, depending on estimates, in terms of the gaps between men and women's pensions. So women are therefore considerably worse off when they're reaching retirement age, and also they're not necessarily having the same levels of investing, which is fed into their pensions. So again, there's gaps in how many women report that they are investors, crucially, as a term, which I find really interesting because very few women would describe themselves as investors, even when they've got investments. But then when we look at the reports of how many women actually do invest, which is higher than those that call themselves investors, it's still lower than that of men. So there's some huge gaps to sort of tackle when it comes to investing, confident and actually doing it. But they are getting better. And that is, I think, not to be doom and gloom. It's the good bit. They're getting better, but there's still more to be done.
Absolutely. And that's also part of your contribution to this equation. It's, making sure that that gap can actually be smaller and smaller and smaller with decades. It's going to take some time, but we're here, we're working for it. And that's also part of the reason why we're doing also this episode. It's by educating women, by giving them absolutely all of the resources that they need, all of the confidence that they need, because there's also a huge block that comes when we're talking about finances, which is, limiting beliefs. For example, I'm not good with money. This is way too overwhelming. Finances are way too complicated. And it's very interesting what you're saying, that even though women are investing, so they are doing the things, they're not attaching the identity of I am an investor. So that's super interesting.
Yeah, it certainly is. Yeah.
So you've supported men and women throughout your career. Is it true that women are better investors than men? I read this somewhere, but do you think women are better investors than men?
I love this question. There has been one specific study carried out, and it's tied into lots of other headlines. And of course, the way they did it, I think it was over at the University of California. They found that actually, so retail investors, so the likes of you and I, normal individuals, when they were women, outperformed men by a percentage. It was zero point 0.4 percentage points for anybody that really wants to know. So yes, there have been studies that have shown that women are better investors than men. There's some reasoning for this. The study did go further and suggest that actually it was because often women don't take such spontaneous decisions when it comes to their investing. They tend to hold their strategy a little bit longer. They tend to think things through and research it a bit more, whereas generally, stereotypically, men are a little bit more quick to react, quick to change, and that means that often they misjudge certain situations, also can cost more money in the likes of trades, and not necessarily react in a way that the market would want. There's not enough data within professional investors. So if we look at fund managers, for example, very few female fund managers. There was a stat for ages that there was more fund managers called Dave or David than there were female fund managers, which is just wild. It's actually changed now. There are more female fund managers than Daves. So, we're going places. But because all of their funds are in such different areas, it's really difficult to compare. So there's very little data. But I think for me, the key point that we should all take from it, be it women or men, is that yes, there are studies that suggest we are more successful, but it's the reasoning why that we could all understand a bit more, which is that generally that think through, that research, and that longer term view is why they're generally more successful.
Absolutely. And I think it's also worth mentioning the difference between investing and trading.
Yes.
Because at least when I got introduced into all of this world of personal finances and all of this, and I started investing myself, in my mind, first, I had this limiting belief it's way too complicated. There's no way I can do it. And mind you, I have a master's degree. I studied business, I studied finance
Yeah.
as part of my master's degree. And I still thought this was way too complicated. So I do imagine a nurse, a woman who's doing something, a kindergarten teacher, a person who has never studied finance, we can feel that it's super, super complicated. But then if we understand this difference between investing and trading, which is also linked to long term and short
Yeah.
term, when you understand a couple of principles, things become actually pretty easy. So, can you explain a little bit more this investing versus trading and short term versus long term? Because I think that's part of what explains that maybe women are slightly better investors than men.
Yeah, absolutely. So for me, trading is firmly watching moving data and graphs to try and beat the market in the short term. And the way that you'd be doing that is by buying stocks, other instruments as well. So I'm talking about the likes of derivatives and potentially other investments too, and selling them very, very rapidly. And the sale would be judged on, as I say, changes in data, analytics, and certain strategies that traders would employ and follow, all with the gain of making money in the relatively short term. For me, investing is kind of a blanket term. Trading would still fit into overall investing, but for me, investing is more about taking that longer term view and choosing investments that are suitable for you within a strategy that works for your risk appetite, your financial goals, and whatever else is going on within your life and financial picture. And thinking about that long term view. And when I say long term, I'm talking about 5 years or more. Really, 5 years for me would still be quite short term when we're thinking about investing as an overall picture. So, investing is about those longer term, not just trying to chop and change and beat the market. And it's an interesting point because I feel that I've spoken to many women across the years who have it in their mind that to be called an investor or to be deemed an investor, as you say, you need to be trading daily, you need to be selling and watching all these numbers move, when in reality, investing can be much, much calmer than that. It can be a simple check-in once a month that you've set something up and it's just ticking away in the background.
Absolutely. I think we all have in mind like this Wolf of Wall Street
Yep.
kind of vibe. And it's like, but we're not that thing. Like, we're actually the little lamb. I don't want to be a wolf. Like, I just want to be a little lamb and see my portfolio grow and grow every year.
Exactly that. I think The Wolf of Wall Street's an interesting film for a reflection on the financial industry, but it's not done many favors for a view of what a regular, calm retail investor can look like.
Absolutely. Yeah, I think to me, the biggest mindset shift was to learn okay, there's these big principles. You look into the long term, you start putting money in there, and you just let it compound over time. You don't even look into it, and you just let it be. Trump is putting tariffs, the world, we're going into wars, everything is exploding. You just don't look into it. You just wait at least 5 years. You just let him there for at least 5 years, even more, and you just let it be. And it's actually a way of thinking about finances that it's much more soothing, much more
Mm,
relaxing, because we don't have to be there on top of it. We don't need to know everything. We just need to know some principles,
yeah.
and then we trust that those principles work because they've worked historically, and that's it.
Yeah, exactly that. And, the historical point is really, really key, which is that over the long run, when you look at overall market performance, it consistently delivers returns. And actually, when you compare it to the likes of trading, it's relatively unusual that humans outperform the overall market. So it's certainly something to bear in mind when you say, have those principles, have that strategy, set it up and let it be almost. It doesn't have to be something that it's a constant knee-jerk reaction and diving onto the latest trends. Of course, whatever works for you, but on the whole, I'd say that's what investing is.
Yes, absolutely. So which are the biggest misconceptions that women have about finances?
Yeah, there's a few, of course. I think for me, the biggest misconception is that they just don't know enough. And I've spoken to a lot of people who've gone, I just want to know a bit more, or like I'll start investing when I know a bit more. But the reality is that know a bit more is a totally untangible goal, and nobody knows it all. It's about having the belief that you know enough of those principles for it to be a sensible, rational, and well-researched decision, but also taking a bit of a leap into the unknown, because there's always going to be unknowns. I'm in the space, have been for many years of my career. I've got various qualifications, but I don't know it all. There's still so much more that I could know about different areas of investing. And it's kind of the nice bit, right? Because you can just keep learning, but it is also the fearful bit, I understand. So I think for me, that misconception of they don't know enough to get going, they don't know enough to be sort of qualified to do it as of such, is really what holds women back as well.
Absolutely. And I think this principle we could apply to anything in life, right? But in my experience in life, I think we take one step and then clarity appears. We take the second step and clarity appears. And we take the third step and clarity appears. So we don't know right away how 10 steps are going to look like. You take the first one and you assess and you learn more. Just by taking that first step, you're already learning. Then you take the second, and that's how you move forward. And then when you look back, you've actually done 7 steps, 8 steps, and you never thought you would have gone that far. But if it wasn't for literally taking that first step and learning from that first step. So talking about first steps, what do you think would be the first step for a woman who's, let's imagine she has her corporate job. She has a bit of money left here and there every month. Where do we start? What's the first step for her?
It's a great question. So I think for me, first it's really a basic one, but you need to get your budgeting right. Get nailed what's coming in and what's going out each month. Now, as you mentioned, with this hypothetical woman that we've got here, she's got bits left over, but find out what you've got left over and work out what you are actually spending your money in. Secondly, on a purely logical and sort of strategical basis, if you've got any debts, when you have a look at that, tackle those debts. Now, when we say debts, we sort of split them into good and bad debts, and it's a little bit black and white, but it helps you to get a clear picture of what we mean. Generally, those good debts would be the likes of student loans, mortgages, and maybe business loans as well. And these are investing into something for your future, which is why they're called good loans. Usually they have more favourable terms of repayment, and they're not the ones that I'm talking about in terms of prioritising. When I'm talking about prioritising, I'm meaning the likes of bad debts. So the things like credit card loans, payday loans, mini loans that can have really high rates of interest. So they can quite rapidly spiral out of control. And if you've got any of them, they generally need attention quite quickly. And don't underestimate how many people are high earners and still have high levels of debt that still need addressing before they can then progress to the next stage, which is looking at their kind of emergency funds. So generally everybody needs a little bit of cash sat in some sort of accessible account. We often say around 3 to 6 months of expenses. It will just depend on your situation as to how much it needs to be. If, for example, you've got 2 kids and you're a single mother, you're going to need more than somebody who is employed and perhaps has no children, because the buffers just don't need to be quite the same. And fourth and finally, it's kind of thinking about those financial goals. So really set them up, be it buy a property, be it thinking about your retirement, maybe you're thinking about some sort of financial freedom in the future that allows you to drop down days of work, whatever it might be. Get that goal really, really clear, because this then helps you to move into investing. And if you know why you've got that goal and what you're investing for, it makes everything so much easier, because then you know why, for example, your budget isn't that you can spend everything that you earn every month, because you know that you're working towards something. And it's really like a simplistic explanation, but you very much get the idea.
Yes, and you get the motivation as well, because you're delaying gratification. If you can't buy that extra pair of shoes or maybe go on that extra trip or whatever it might be, but you know that you're buying a house in a couple of years, then you might delay your gratification, not get your shoes, not get the extra trip, and actually get your house in a couple of years.
Exactly. You've got everything in life, unfortunately or unfortunately, involves some level of sacrifice, right? So as you say, if you know that you're not buying those shoes today, you know that at least it's going towards something that you want more in the future, hopefully. So that is kind of then the last step, is that thinking about getting those goals set up to get your investments set up accordingly.
Let's imagine a woman, she's in her corporate job, having a stable, predictable life. And all of a sudden she's like, you know what? I'm going to rock the boat and I'm going to start my own business. And at some point I'm going to quit this job. So how can a person who's planning to do something like that prepare their finances for such a change, actually?
Yeah, because it's a huge change, right? If you are this corporate woman that we've got that's going from a relatively set salary, maybe even a bonus in there as well, having all their taxes already sorted for them because they'll be salaried and it's already handled, having the pension hopefully set up for them as well, and then suddenly to throw yourself in the deep end and launch a business. It's super exciting, but there are things that need to be done. And one of the things that I find scary about female business owners, but you also see it within male and others as well, business owners, is that they put everything into the business, which is so admirable, but they totally neglect their own personal finances. And for me, I'm very firmly an advocate of you still got to look after yourself no matter what happens, essentially. So what I would do to get yourself set up for getting your business is firstly get that emergency fund. It might need to be bigger because if you've not got a set salary, you're going to need a bigger buffer of cash to get you through potentially those first few months, however long it's going to be, before you've got a steady income coming through. The next thing I'd look at then is thinking about your tax situation. So just get a little bit savvy as to how it's going to work with your business, with yourself. It'll be different for everybody, depending again on what country you're in or what kind of business setup you're going for. So get yourself knowledgeable on how that's going to look, because it'll save you headaches down the line when the business has grown and you're suddenly in a minefield of, oh, heck, I've got a big bill, tax authorities are coming out, whatever it might be. So set some of your knowledge basis up. I know that it might not be the most exciting reading you'll do in your life, but there's ways to break it down. And then I think the third thing on that is then just thinking about still focusing on your future. So make sure that you have some mechanisms set up, that you are still contributing to some sort of pension, thinking about your investments still, and making sure that you've got that built into your overall business runway as well, as to what the plan is going to be for how you as the individual also manage you as the business director too.
Absolutely. Yeah, because as you say, when people have a salary, all of this is taken care of. Taxes are done, pension is done, everything is done. And then when you're a business owner, you need to think about the taxes, pay the taxes. You need to think about your own pension. So there's some preparation to be done. And I think the more, because I support women in this transition, and that's also the reason why I'm asking the question, I do see women who jump straight ahead and they're not really considering these kind of things. And then I also see women who are preparing the setup, and then they do the change. And of course, the results are very different in one case or the other.
Yeah, I think, and as you'll know as well, if you can reduce some of those stress levels and admin noise that has to take place around the likes of taxation and other financial matters within the business, then you can focus more on the business and growing it, right? Because you've already sorted out some of the foundations and the base work for how you're going to handle paying for a tax bill, getting an accountant, whatever it might be.
Absolutely. Absolutely. And now let's imagine another one, the colleague of this first woman.
Yeah,
they're both in the corporate job, right? They're very happy sharing lunch together. And so one of them is going to quit and create her own business. And the other one is planning to be a mom.
Okay, brilliant.
Another very big change in the finances of a woman. So how can this second woman prepare to start a family, to have children?
Yeah, they've both got some preparation to do, I think, these two over lunch. So they're going to need to have some good chats. When it comes to having a family and thinking about children, the sooner you can start, the better. And that kind of goes with all things investing. But don't panic if you are already at the stage, and it is totally normal. It's what happens to lots of people. As the phrase goes, the best time to plant a tree was yesterday, but there's still today, right? Because today is better than tomorrow. So in the UK, for example, the maternity pay is pretty terrible unless you're in a relatively comfortable corporate job that offers a better level of maternity leave. But even then, you'll likely be facing changes to your overall financial situation. So first thing I'd do is get informed on what it's actually going to look like, because the amount of people that do get excited about having a family, which is fantastic, fall pregnant, and then have no idea what it's going to look like financially, it is really, really interesting, but also quite scary, I think, from my rational financial perspective on it. So have a look at what that is actually going to realistically look like. For example, does your partner get a level of paternity leave that could allow for some shared responsibilities that might then impact the finances in a different way? Just get savvy on what that's going to look like. Secondly, I would then start, as I say, saving up pots and making relevant changes to your overall financial picture picture that then fill in the gaps of what is to come with maternity leave. There's so many groups out there popping up, be it on LinkedIn, be it on the likes of the app Peanut that is accessible here in the UK, that talk about all the different things you can access, the support, etc. But crucially also just pools of knowledge. So get yourself involved in some of them. And then as and when the little one is here and, she's moved into the next stage of being a mum, which is fantastic, get started for the kid as soon as possible. I think the stat that has stayed with me, and I repeat it nearly every day, is that if you'd invested every month between being born and the age of 18 and then stopped investing but left it invested, you'd have more for your retirement at 65 than the person who started investing aged 18 and invested every month all the way through to the age of 65. Wow. And so if you can set your kids up for something like that, fantastic, then do. Start sooner rather than later.
Oh my God, yeah. And this is amazing, because you can just plug something in there when they're born, and even if what you're saying until they're 18, and then kind of like they're set for life. So that's absolutely amazing. And I know in the UK you have something like this junior ISA or something like that. I don't know if that exists in Europe, but that's a fantastic financial vehicle.
Yeah, we're very lucky in the UK that we have a lot of tax efficient vehicles. As you mentioned, the junior ISA for kids. There's also actually a junior pension for kids in the UK as well, both of which come with various different tax benefits. Depending on where you are in Europe, there are other similar vehicles. In France, there's the Assurance Vie. In Italy, there's accounts that come with the Poste Italiana, but they work in slightly different ways, essentially. So it's always worth having a look at what they are and if they are beneficial. But no matter where you are, if there's an option that is more tax efficient, generally it's worth investigating first for obvious reasons.
Amazing. And yeah, with finances, time is everything. Because we're playing this long-term game, the more time you have, and if you can start at age of 0, even better.
Exactly.
But any age, we can start at any age, but the sooner you can start, the better. And coming back to this topic of time, is there one financial idea that you wish you knew 10 years ago?
Yeah, I think for me, coming back to the idea of time, and you've touched upon it already, it would be the concept of compounding. And, I very much grew up in an environment whereby my mum was super hot on the budgeting. I remember her going through this file and notebook and ticking things off every month. Investing was a bit of an alien concept, essentially. It wasn't something that was seen as something for us. But the idea of compounding, whereby the sooner you start, the better, and the more time you have, the better, is really revolutionary. It's definitely something I wish I'd understood 10 years ago. And I like to think of it as, I'm quite a visual person, it's almost like a snowball rolling down a mountain. Like the bigger the snowball gets, the greater the surface area, the more snow it can pick up, and so on, because it's exactly the same with your money when it's compounding and growing, basically. I think that more than anything is the thing that I wish I knew.
Absolutely. Well, 10 years ago, I would have been 24. You would have been.
Yeah, what was the one thing for you? What do you wish you'd known 10 years ago?
That I actually was clever enough to do it, that I could do it.
Yeah.
That I could do it.
I like that.
Because at 24, I didn't think I was able to.
Mm-hmm.
And I had just finished a master in business and I had studied finances, but still it felt so, you study all of these like theoretical finances and equations and stuff, but nowhere teaches you like, okay, this is the account. This is where you put the money. This is what you do on a monthly basis. No one teaches you all of that. So I wish I had known I can actually do this. Let me give it a try.
Yeah, I think that's a good one. The sort of the boost of confidence and the little nudge towards you do know enough.
You do know enough. Yeah, or if not, read, or if not, find a community of women who can support you. Find someone who can teach you all of this. So thank you so much for this amazing conversation. Where can listeners find you online if they want to hang out with you, maybe ask you a question on their finances, check out your services? Where's the best place to find you?
Yeah, great question. So as you mentioned at the beginning, I'm now the co-founder of Financial Freedom Coach. So you can find us on our website. Hopefully we'll be able to send a link or whatever. But you can also find me on the Financial Freedom Instagram, as well as my own Instagram. So I have a channel called Words on Wealth, where I talk more about other investing topics as well and community. But hopefully through both of them, you can find me and continue to further your journey on to financial freedom and with investing as well.
Amazing. So we're going to put all of those links in the show notes. And I like to finish every episode with 3 rapid fire questions. Literally spontaneous. The first thing that comes to mind will be the right one. So are you ready?
I'm ready. Here we go.
Amazing. Let's do it. When was the last time you felt bliss?
Starting with the big questions. The last time I felt this, I'm going to say the weekend. We were pretty relaxed. We'd been at a really good friend's wedding. The sun had been shining. And then on the Sunday after the wedding, we were still on a little bit of a high because we'd been with our friends and we were celebrating love. And some friends were doing some work in the garden. I was drinking coffee. Yeah, I think it's Sunday, I'll say.
Amazing. Amazing. The second one is, if you could think of one idea that fundamentally changed your life, what would it be?
One idea that fundamentally changed my life. That's a big one. As a rapid fire question, quick answer, but there's not a quick answer to that one. I'm going to say the one idea that actually changed my life the most was the idea of the 7K hypothesis. That was the one that popped into my brain. So bear with me whilst I quickly explain the answer to this.
Please do, because I don't know what that is.
Yeah, really, really cool one. Now, of course, it's going to alter slightly depending on inflation, where you are, etc. But the concept is great. It's essentially that earning around 7K is kind of the perfect amount, because at that point, what you have to do is make decisions around what you want to do. So you don't have enough money that you can go on any holiday in the world, that you can buy all the luxury items in the world. You have to choose. Maybe you have to prioritize certain clothes, holidays, whatever. You've got enough that you're probably comfortable that you can walk around the supermarket and afford food. You're not necessarily stressing about putting clothes on your back or some of those really difficult decisions around money that many in the world face. But crucially, because you've made the decision that you want the things that you spend the money on, you enjoy them more. Whereas when you start earning more and more and more, what can happen is that you no longer enjoy the things as much because you've got wealth of options and it feels easy. And I think for me, it was a real explainer of kind of, moving through the financial world, seeing more and more people earn more and more, but not necessarily getting any happier. And, we see a lot of lifestyle creep. The more people earn, the more that they just spend, basically, and kind of working out where that point is of freedom. What is financial freedom and what does it look like? And it's not necessarily that you have to be totally abundant in terms of huge quantities of money, but rather it's about how you choose to spend it and what that lifestyle looks like when you're making those decisions.
Love it. Amazing. So aim for your 70K, 75K if you're not there yet.
Yeah.
If you are, make smart choices.
What that figure is for you, I think. Find what the figure is where you have to make the decisions to enjoy the things that you want the most.
Absolutely. And if you could choose one rule that everybody in the world needs to obey, what would it be?
We're in tough times. I think, you've asked me, the first question was, when did you last feel bliss? I think for me, it would be peace. If I could choose one rule that people would need to obey, it would be leave the world, leave others just in peace. And then I think we'd have a pretty nice place to live.
I couldn't agree more, especially nowadays as we were recording this episode.
Yeah, exactly that.
Oh my God. Thank you so much, Zoe, for this fun episode. I think we've been quick, witty, to the point. Thank you so much for bringing your expertise, your knowledge to the show. It's been a true pleasure. Thank you so much for your time.
Thank you so much for having me. It's been a delight. Hopefully you enjoy the episode.
Amazing. I will see my listeners on the next podcast episode. And in the meantime, in Blisstopia we trust. If you loved this episode, spread the word, share the episode with a friend who would love to hear this, subscribe to the show, and leave a 5-star rating on Spotify, Apple Podcasts, or YouTube. This real quick action on your side helps the podcast grow, reach more women around the world, and it would literally make my day. I will see you next Friday for the next episode. And in the meantime, in Blisstopia we trust.